Our next guest points out that the PCE data is backward-looking, like a lot of things. Jeremy Siegel is Professor Emeritus of Finance at the University of Pennsylvania's Wharton School of Business. Whenever you're on, I think, Professor, that what you said last time, many times I'm starting to see those things happen. And I think you, especially about the economy recently, the Fed, you've been outspoken that inflation was probably already in a downward trend and that the economy was already cooling off, so they didn't have to do any more. Let me ask you, throw one wrench into that. When we had this banking issue in the last month, I've heard people say that the Fed reversed months and months of balance sheet reduction and tightening and basically threw it all back out there just to stem that situation. And you've talked about M2 slowing. Did we relight the monetary fire with Silicon Valley Bank shares? And does that concern you?
No, that doesn't. And by the way, that discount window borrowing, I think over 50% has now been paid back. Discount window borrowing isn't in M2. And on Tuesday, just last Tuesday, we got M2, and it was another decline. We've now had a year of decline. In fact, it's the biggest decline in 85 years for that broad money supply data. So, yeah, I mean, I think that's still got to be a concern for the Fed. Now, next week, what I'm looking for, I think there's two things I'm looking for. First of all, whether your good friend Austin Goolsbee is going to dissent or not, Joe, because he's talked about keeping rates the same. But I think the rates are definitely going to go up a quarter point. What I'm looking at is the statement that goes with it. I'm looking at, is Chairman Powell going to say it is likely that we pause now and assess what the economy is going to do? Or does he really say, oh, and there's more work to be done on inflation? And I think the tone on that balance is going to be very critical to how the market is going to move next week.
It's interesting. I really hate to say that Austin seems really reasonable and like a voice of reason, but I think that's right. But that would be something if he were to dissent. Are you expecting that? Yeah. I don't expect that.
Well, there has not been a dissent.
One and done, yeah. Huh?
Well, I mean, there's not been a dissent for almost a year and a half at the Fed, which I found remarkable during one of the most tumultuous monetary periods in history, that you would not have opinions one way or the other. It's just like everyone falls in line, nodding their head on what Chairman Powell does. I would like to see some independence here. So I'm rooting for Austin to say, hey, I think we can stop now and not get a quarter point. I mean, it's mostly just a statement. Hey, I'm not going to go with the crowd 100% of the time the way everyone has for almost all of Powell's tenure.